right, guys, investors have taken a liking to MEG Silver's third quarter financial results. The equity was up in midday trading following the release, despite the underlying metal being down on the day as the value of precious metals continues to sink. MEG Silver in the third quarter saw substantially improved operating and financial results, driven by continued success at their joint venture in Mexico, while continuing to build a war chest as a result of the strong performance. Folks, we're talking MEG Silver, we're talking Q3 earnings. Let's dive in. All right, so let's start off with the high level. In layman terms, MEG Silver is a bit different than most other miners we've covered this earnings cycle, because their flagship asset is a 44% ownership stake in the Wanakapico mine. The mine is operated by the world's largest silver operator, Fresnillo, which means MEG doesn't record top-line revenue. Instead, they report income using the equity method of accounting, which is based on the quarterly performance of the mine, and then MEG reports their income based on their portion of ownership. As a side note, MEG reports their financials in US dollars. In the third quarter, MEG Silver recorded top-line income from their Wanakapico joint venture of $25.6 million, an 87% improvement year over year. After general and administrative expenses, along with exploration and business development expenses, MEG posted operating income for Q3 of $21.9 million, a whopping 139% increase year over year, thanks in part to cost reductions. Now, after interest, income, and taxes, MEG posted a net income of $22.3 million, or 22 cents per share, versus a net income of $8.9 million, or 9 cents a share in the year-ago period. Consensus estimates, meanwhile, came in anywhere from 18 to 21 cents, but either way, it was a beat. Adjusted EBITDA totaled $55.7 million, a 46% year-on-year increase from $29.9 million. The company, meanwhile, closed out the quarter with $114 million in cash on hand, up from $97 million as of the end of the second quarter. While MEG also has access to an undrawn $40 million revolving credit facility and no debt on the books. Okay, so the real story here is the Juanicepio asset, which is based in the Zacatecas state of Mexico. In the third quarter, the asset on a 100% basis saw top-line revenue of $176 million, a 41% increase year over year from $125 million. Although in fairness, the newly developed mine achieved nameplate capacity in the final month of Q3 2023, so the numbers aren't entirely comparable. The venture also saw a 26% improvement year over year in metals prices, which contributed substantially to the top-line figure. The revenue was off the back of 7.1 million silver equivalent ounces of production at an average head grade of 735 grams per ton silver equivalent. Silver equivalent ounces sold during the quarter, meanwhile, totaled 6.2 million ounces versus 5.7 in the year-ago period. These ounces were sold at an average price of $30.16 per ounce versus $23.51 in the year-ago period. All-in sustaining costs per silver equivalent ounce sold, or AISC, came in at $10.83 versus $12.75 last year, a 15% decrease. Gross profits at the mine came in at $114 million, a 92% improvement over the $60 million gross profit last year, which was a function of lower production costs in Q3 2024, despite substantially improved top-line revenues. Net income on a 100% basis came in at $56 million versus $26 million last year, leading to MEG recording the aforementioned equity income of $25.6 million for the quarter. Operating cash flow from the mine was $110 million versus $57 million a year ago, while free cash flow climbed from $41 million in Q3 2023 to $97 million in Q3 2024. In terms of guidance for the asset, the only tidbit we received an update on this quarter is that Fresnillo anticipates silver grades to be at the top end of the revised guidance grade range of 420 to 460 grams per ton for 2024. All said and done, attributable silver ounces sold during the quarter for MEG Silver came in at 2.7 million ounces, while the company's all-in sustaining costs were $1.26 an ounce higher on a silver equivalent basis as a result of MEG's own cost structure. Okay, so let's touch on MEG's other assets. In addition to their joint venture interest in Wanakapico, MEG has interest in two projects, the Larder project in Ontario and the Deer Trail project in Utah, both of which are exploration stage. During the third quarter, 1,700 meters were drilled from surface at Deer Trail, with 3 holes completed year to date, while another is ongoing. At the Larder project, over 12,000 meters will be drilled in the third quarter across 4 different target areas, with the targets including a large IP anomaly and extensions of known mineralized zones. Regional and field programs were also conducted at the Gold Stake property, with channel and grab sample assays testing as high as 32 grams per ton gold. The third quarter also saw MEG option out its Cinco de Mayo project to Apollo Silver, in exchange for a 19.9% stake in Apollo and the requirement to drill test at least 20,000 meters over the next 5 years. All right, so let's wrap it up. MEG Silver had a strong quarter, resulting in the continued buildup of capital on their balance sheet. Given their currently low exploration spend, just $138,000 in the third quarter, which also includes business development, it's unclear what that capital will be used for. Analysts at TD are calling for a capital return strategy, but who knows if that will actually be implemented. Given that MEG isn't the majority holder of any producing asset, maybe that money they're generating would be better spent acquiring an asset to push the growth angle, rather than letting their current flagship asset deplete while handing cash to shareholders. But who knows what path they'll choose. In a rising silver environment, I suspect there's going to be a demand from investors for both types of strategy. I actually think that Donald Trump getting elected is really good news for precious metals. And I think that right now the market hasn't quite figured that out. They're trying to see what his policies are going to look like. But if there's one thing we learned during his first term, and we should probably be reflecting on, it's that this man loves to spend money, he loves to cut taxes, and he loves to create big deficits. I don't see how that isn't great for precious metals. And I think that names like MEG Silver are going to be rewarded once we start to see the torque come back into precious metals, which I fully expect it's going to come right back here strong in 2025. All right, everybody, thank you for watching. If you're long MEG Silver or you enjoyed this video or you have some general feedback for us, please put it in the comments section. We appreciate all the engagement we're getting. We're really crushing it this earnings season on our YouTube channel, getting lots of comments. We've added over 800 subscribers this month alone, and we really appreciate everybody who's given us their support. So guys, if you enjoyed this video, please smash that like button, subscribe, and ring that notification bell. All right, everybody, thank you for watching.